Welcome to DACM Insights, where we explore the intersection of traditional wealth management and digital assets. Whether an institutional investor exploring digital assets or a wealth advisor helping clients understand this space, you'll get practical insights from leaders who are actively managing real money in both traditional and digital assets, and the entrepreneurs building the disruptive tech that drives the space so exponentially. Hi Kash, thanks for joining us today.
Pleasure to be here, man. Thank you.
I think before we get into the meat of what I wanted to talk about and your role and how Jupiter's progressing, it'd be great if you could just introduce yourself and how you found your way to crypto and Jupiter and specifically.
Yeah, it is a long but not that interesting story. My name is Kash Dhanda. I'm the cat herder at Jupiter is my official title. Chief Operating Officer is my unofficial title. But I only joined Jupiter in January. Before that, I was an advisor to the company. I was, I think, their first and only advisor for a period of about 6 months or so, helping out on some DAO stuff and some other things. And I came into contact with Jupiter because I was running this thing called Super Team at the time, which helps onboard builders to the Solana ecosystem, whether they're talented devs or founders or designers or anything else. We just want all that talent on Solana. And that's kind of how I built up my network across the ecosystem. My title there was Sherpa. So I'm a man of many made up titles, But yeah, I got into crypto back in 2016 is when I really jumped in with both feet. My background is in postmodern political philosophy. And so I read the ETH white paper randomly one day, and DAOs were mentioned in the first paragraph, and I was immediately nerd sniped and couldn't help but go in. And so I bought some ETH. It went into the DAO, which of course famously got hacked. And then right around then, love of DAOs kind of went down a little bit, but my love of crypto went up in corresponding measures. Ever since then, I've been hooked.
A very test in production type experience with DAOs right out of the gates.
Yeah.
Have you ever found anyone else with cat herder on their business card before?
I have. I think I'm one of one.
Okay.
And the truth is, the only reason that I even go by Chief Operating Officer is we did this MOU with the Kazakhstan Central Stock Exchange. There was Russian press covering it. And I had a quote and it was like, Kash Dhanda, cat herder. And they were like, what is this? We cannot translate this to Russian. We need something, something else. So I was like, all right, let's go Chief Operating Officer.
Cool. I think one of the things that's amazed us about Jupiter, one of the things we love is just the ability for the project to ship stuff fast, right? Like things happen in crypto super fast, and as soon as products are developed or talked about, Jupiter seems way ahead of the curve. I mean, Lens a good example, right? You guys kind of come out of the gates and it's at $1 billion before you can kind of blink. So how do you keep that sort of speed? Like how do you keep an organization that nimble and that fast to get product out in probably one of the fastest moving markets there's ever been?
Yeah, well, I think it's two components. So there's one that's kind of cultural, and then there's one that's strategic. The cultural piece is that Jupiter, despite having now 12 revenue generating business lines, is still pretty small, right? We're something like 105-ish people right now. And if you go to some of the centralized exchanges, they'll have 300 people on just their wallet product alone, right? So in comparison, we're still quite tiny. And the reason we're able to make that happen is that we work culturally in this kind of founder mode sense, right? So Jupiter has largely grown through mergers and acquisitions. I think we've acquired about 7 companies now, 1 or 2 of which we still haven't even announced. And so we have these CEOs come in and they lead individual products. Guillaume, who leads our portfolio product, which is the most used portfolio product on Solana now, is a great example of this. He'd been running his own portfolio startup, small 3-4 person startup for years, ended up joining forces with Jupiter. And now, they're doing, I think 3 million users per quarter on their products. And he has both the confidence and the ability and the leadership skills to be able to push that forward somewhat autonomously. And so culturally, having a lot of this ecosystem of founders internally is what separates us. I think we have about 14 or 15 founders/CEOs who work at Jupiter right now out of the 105, which is pretty crazy. And then on the strategic side, we just have compounding returns to this DeFi super app strategy that we've been pushing for a little while. The idea being the more kind of user attention and trust we can aggregate, the more we can launch new products and then cross-sell, upsell, just create more value for our users. And that's exactly what you saw happen with Jupiter Lend, as you mentioned, where I'm actually really proud of the fact we hit $1 billion in total supply in 8 days, which I think is the fastest ever on Solana. And you did not see other lending markets drop substantially in their total supply. It's because it was not a PvP, we're taking the pie kind of thing. We're bringing net new users on who had only ever swapped or maybe traded perps a little bit into lending markets. And that's what allows us to just continuously accelerate each product kind of reinforcing the others.
And with your background before Jupiter, now Jupiter, the speed of activity on Solana is just from an outside observer insane. And for an institutional investor like us and other institutional investors looking at the Solana ecosystem, what do you think makes it different? Like, how does it get that critical mass, and how do you find the ecosystem working together?
I think that there's some of it is path dependent, right? I think I give a lot of credit to FTX and the FTX crash. Obviously, for anyone that was around, it was not like a super fun time to be on Solana or really in crypto generally. But the community trauma bonded in this really deep and intense way that other ecosystems have not had the benefit of, quite honestly, especially other newer ecosystems. Ethereum has this, with the DAO crash and some of the other things, but there's not too many examples of this across. And so that brought people together and built this kind of like blood loyalty that I myself have as well to Solana. Because if you stuck around from, all the way down through $8, you're going to stay pretty committed. But more kind of practically, I think that Solana is proud of the fact that it's the revenue chain, right? This is where real businesses come to be built. And it's one of the few places in crypto where you can actually build a real thriving business at scale. I mean, 3 of the top 5 fastest growing startups in human history are Solana startups, right? That were, Axiom, Pump, and Photon. So you see a lot of that momentum just continuously build. As you see a big business, a unicorn is born, that attracts other real entrepreneurs to come over. Nothing against academics, who are obviously very important in this space as well, but at a certain point, what you need is the marginal world-class entrepreneur, not the marginal world-class academic. By the way, we'll take both. If you got world-class academics, come to Solana as well. But I think that's one of the things that distinguishes it from other ecosystems, is it draws in real founders and real builders in a way that other ecosystems don't.
I think that's a really important point. The darkest hour of Solana was probably one of the ones where we built the most conviction. To see, there was one of the noisiest markets I've ever seen. The entire world felt like it was just baying for Solana's death, right? And then out of that, we saw things like Bonk come out of nowhere, right? Like really cool, fun things, just to prove that there are still people engaged. There are still people willing to roll up their sleeves and make something out of this. I think you've absolutely nailed it there. I think that was probably one of the key things that, out of that sort of crisis came what's been an incredible next phase of growth. It's been incredibly revenue generating for Solana. I think, one of the key products, one of your key products is around liquidity provision, swap and trading. And that market moves at incredible speeds. We're seeing, as an aggregator, you get to see all sorts of angles. We're seeing sort of dark pool swaps developing, those sorts of things. How do you see, Uniswap for hooks, those sorts of things? You're somewhat insulated from what I'd say is those liquidity wars, a Switzerland of sorts. How do you see that model going forward between RFQs, AMMs, dark pools, all those sorts of, and the next iteration of how we can bring liquidity to users faster and cheaper?
Yeah, I think that you're seeing a rapid evolution in market microstructure on Solana. And it is like clearly leading the way across all ecosystems on that side. And it's really fun to be like at the center of the future of finance as it's being born. Indeed, I think AMMs have long dominated for good reason. They're trustless, they're very scalable, and they're particularly good for long tail assets. And increasingly what we're seeing is that that's more of where their volume is coming from rather than from the major pairs, where instead a lot of the major pairs are actually being fulfilled by these dark pools, as you say. I prefer prop AMMs. It's a little bit less mischievous. But I think proprietary market making operations on chain like Humidify, Goonfi, Solfi, these kind of companies. And what we're seeing them do is basically have really tight spreads because they're looking at centralized exchange pricing and other pricing venues, and they're pushing really fast Oracle updates with like very little CU. And so they're just able to out execute a lot of the AMMs on the bigger pairs. And so you see this even right now on Solana. 3 months ago, Meteor or Radium, traditional AMMs, were the largest sources of liquidity. And then I think in the last week or two, you've seen just Humidify gobble up a ton of volume, especially on the Sol USDC pair. And so they're clearly taking more volume. And then, of course, you have RFQ, as you mentioned as well. Jupiter has the #1 RFQ solution on Solana. We started back in January called Jupiter Z. It does about $10 billion in volume per quarter right now. And even that, I think we're seeing like really tight spreads, obviously no slippage in RFQ models, which is really exciting for users. And more long tail assets being incorporated by that, especially new token launches and project launches. Where this all goes, I think it's still yet to be seen. I mean, a year ago we didn't even have prop AMMs, but my hunch on the way that things are developing is that these prop AMMs or dark pools are clearly taking the thick head of the graph here in terms of Sol USDC and other major pairs. You're actually already starting to see them expand outside of just Sol to now doing things like Jupe, Bonk, Jito, and some of these other kind of major tokens on Solana that have good volumes on centralized exchanges. which is a trend I don't know how many people are aware of. So you're going to see that continue to kind of eat up both the big assets and then some more of the blue chip alts, I think. The AMMs will always have a place, I think, for long tail assets. It just does not make sense. In the way the prop AMMs kind of update the oracles, it does not work unless there's other pricing data that's deeper for them to kind of borrow from. And so launch pads, new meme coins, new projects, I think will kind of always live with AMMs. And then RFQ is somewhere in the middle, right? If you're a high quality project that is launching for the first time and working directly with market makers, especially if you're trying to do liquidity on chain and off chain, then you're going to see more volumes go there. But overall, I think net very bullish on prop AMMs, especially as they continue to expand. I think they're going to continue to dominate for some long period to come. And still very bullish on AMMs and the amount of volume that they can drive for long tail assets. RFQ is probably the trickiest one. I think you're seeing a lot of traditional market makers just start doing prop AMMs instead because it's just faster and you can fill orders faster as well. But the future is far from written.
Yeah, I think it's an interesting time. I mean, you guys obviously strategically have a good spot, and all the developments you're talking about are great for users, right? They all mean more liquidity at tighter spreads. So whilst there's a lot for a lot of different projects to think about how they battle around that, I mean, it's all moving in the right direction from a user perspective, which is where, from a
Yeah.
top-down level, we all need to be focused.
Humidify, which is the largest liquidity provider on Solana. I think they're doing like $8 billion in volume a week. They are launching a token, and they're launching a token with us at Jupiter on our new ICO platform called DTF. They're going to be our first ever launch. And so Jupiter, you kind of get this call option across however the liquidity landscape improves over time. Jupe and Jupiter itself are going to continue to benefit.
I think that leads into next question I want to talk to you about. Jupiter is like the super app of Solana, right? So how do you bring the revenue together and keep the whole is bigger than the aggregate of the different pieces?
That's certainly the hope. For us, it really comes down to having a long-term mindset and then trying to diversify. So internally, we talk a lot about 2030 as kind of the first checkpoint, the first major checkpoint. Meow, one of our two co-founders, will not take a single token until 2030, which is like 9 years after the company started, which is unheard of in an industry where everyone's trying to like cash grab as quickly as possible. And so that's a really useful anchor for us to say like, okay, well, what does the world actually look like in 2030? And what can we build today that's going to allow us to benefit from it down there? And so genuinely, we're not really in revenue maximization mode. I do think that Jupiter is under monetized basically across the board, and intentionally so. Because really, we think that it is a fight to grab as much land and as many users and much mind share as possible, whether that's literal like retail users, institutions, integrations with custodians, et cetera. It's really important for our pricing to be at a place where, yes, it's sustainable for Jupiter. I think we're annualized doing about $190 to $200 million a year right now. But also, it's not so much that we're kind of choking our own growth. So from a business perspective, our revenues are something like 50-ish% coming from our perps product, Jupiter Perps, which is the number one perps product on Solana. And then something like another 30-40% will come from spot trading. And then the rest comes from a bunch of these kind of emergent products, I would say. So Jupiter Lend just got started, Studio and DTF, which is the ICO launchpad, and a few of these other ones coming together. So really our goal is to try to build a diversified business as much as possible and a sticky business as much as possible. That's why in Q4 in particular, we're making a major push on the wallets side. So we have a mobile wallet and a desktop wallet. And while those are not giant revenue generators on their own right now, I think they allow users to stay inside of the Jupiter ecosystem and kind of continuously use our products. And over time, we're going to see that compounding benefit continue to increase, where in the same way people, especially in America, just feel comfortable with Coinbase because they've been using it for years. And so when Coinbase launches a new product, they're very happy to use it. They trust it. That's really our approach as well. It's like, how do we kind of own that end-to-end experience as tightly as possible and have revenue maximization come at a future date once the kind of growth is not less parabolic than it is right now?
Well, the Jupe token, or the JUP of Jupe token is the center of that. And just for our listeners, what's the tokenomics model for that now, and how do you see that developing going forward?
Yeah, so the Jupe token is basically the DeFi token, right? If you want to bet on DeFi, if you want to bet on the narratives of DeFi continue to increase, there's very few places where investors can get exposure simultaneously to spot trading, perps, lending, prediction markets, stable coins, and much, much more. So we see it kind of like as a general kind of way to get exposure to DeFi in general with one of the highest executing product teams around. On a tokenomics side, there's 7 billion tokens in total. We're at about 47% circulating today right now. And critically, 50% of Jupiter's on-chain revenues, so somewhere approximating $100 million a year, go back into programmatic open market purchases of the Jupe token via this third-party entity called the Litterbox Trust. And so that creates this like really tight alignment between the business and the token in a way that a lot of other folks don't have or kind of claim that they'll have eventually. And so that works really well for us. There are a bunch of other kind of smaller details because Jupiter has such a complicated business. The token also can be complicated. So, for example, the overall token supply is also deflationary because we're voting to burn the Litterbox Trust, which has all those revenues. It's about 130-ish million tokens right now. We burn on a daily basis due to our verification and token management tools, but at a high level, tightly aligned with the business, exposure to all sorts of different narratives, and I would say a bunch of rewards as well. In a sense, it is a reward coin, right? So stakers of Jupe got a very juicy airdrop from Meteora, from Puma, from Rect, and then with the ICO platform, they'll end up getting some more perks and benefits.
And from your vantage point, where you get to see across Solana and what's coming, what's happening, where are the gaps, you think, in the ecosystem? Where's underinvested at both kind of a user and an infrastructure level across the ecosystem?
The good news is on the infrastructure side, I think we're getting close, right? What we're seeing right now, a lot of people talk about how Solana can do so many TPS and so on, and the truth is that it can. The truth is we don't have enough demand for it right now, right? Blocks are not as full, let alone like in January, but they're not even full to a theoretical limit of what Solana can actually support. And so I do think that on the infrastructure side, we're pretty well suited for what we have right now. The question is, how do we better take that to people? How do we integrate that more clearly? I think that it means like going to institutions, going to custodians, working with businesses for business banking in ways that Squads and Sphere and some other great teams are doing. That's kind of like one gap. But the other is really just on the asset side. I think that we need more assets on Solana and obviously more liquidity that will come with that. The truth is, more people than ever want to start to trade on chain or use on chain products. We just launched a prediction market in beta last week. Immediately saw a bunch of results, and we're going to continue to see more coming over there, right? So as more people are coming on chain, I think that the major gaps are easy, safe things for them to do that don't churn them out over time, that are kind of like sustainable in some fashion. In a literal product sense, I think stable swaps are becoming more important of an issue to solve on Solana in particular. There's something like 6 or 7 major stablecoins, and we'll be launching our stablecoin in the coming month or two. So there'll be at least 8. There's certainly a lot to be done in the on-ramp, off-ramp side, to reduce fees and make it easier for people to actually get on-chain. And then I do think that there's still a lot of innovation to be had in the structured products domain. I don't think we've seen a ton of that so far. There used to be some good examples like Friction and Katana, but I think that's going to make a big resurgence as more credit funds like you guys and Tom start deploying more on-chain.
And in terms of, you've got some great leaders in your team, but what are the projects outside of Jupiter you respect the most in the Solana ecosystem? Who's doing it well? Who's going to take the ecosystem forward outside of Jupiter?
Yeah. I mean, I look at the coolest projects as the ones that make me the most angry. Like, who am I most envious of? And I am very envious of Squads. Shout out to my guy, Stepan, who's the co-founder and CEO over there. I think they do an incredible job of working with institutions. They just launched this product called Altitude for business banking and swapping between dollars and euros. Very jealous of them, and a very proud multi-sig user for many years. I think what Austin Federa is doing with 00 and trying to kind of reinvent the internet is a really ambitious goal and is one of the most ambitious projects, on Solana. And so I'd love to see that continue to succeed. And then I'll give like a more niche DeFi one. I really like Hilo, which is a new protocol. Have you seen this already?
No, I haven't. It's an alpha drop right here, Kash.
There we go. A little alpha for you. It's a very small protocol, I will say. It's like at $100 million in TVL, but it's growing like a weed. And basically, they have this interesting, this is going to sound a little bit scary. They have this interesting kind of stablecoin mechanic and this leveraged SOL product where you can't get liquidated. The inner workings of it require some reading, but people can check that out. And maybe one last one I'll say is Oro. Oro just brought tokenized gold to Solana, and it's yield bearing inherently because they take the physical gold and loan it out for a bunch of different reasons. And so I think yield bearing on-chain gold is actually a super fun area that kind of brings new assets to the chain.
I mean, you must talk to a lot of people that are exploring investing in both Jupiter and across Solana. What are the key questions you get from traditional finance, institutional type investors? Like, what are the roadblocks for them both to invest or start to build or transition some of their businesses on chain, and particularly around Solana?
I would say there's a spectrum from kind of like the newer folks. Usually the more money they have, the kind of newer they tend to be to the space. And there's other folks who've been around for a while. And so when I talk to, the multi-billion-dollar capital allocators or the kind of like TradFi companies, a lot of the questions they have are more practical and are much more around like, hey, we want to launch a, let's say, a corporate debt product. It has to be KYC'd. How could we actually make this happen on chain? So a lot of the questions end up being either like product related or general kind of like macro related on what is the Solana thing? What does the future of this look like? How important is going multi-chain? What is Jupnet, for example? Those are the types of questions we get on that side. For people who are a little bit more sophisticated, who already own some Bitcoin, maybe own some Sol, maybe own some ETH, the questions end up being much different. And they typically are around access, right? Like they're just like, hey, which custodians are you in? How do I actually get access to this? The questions around staking because we have active staking rewards. So how do we stake? How do we make sure that we get this kind of yield? How do we get the other rewards that come with having Jupe as a token? And then oftentimes there's like pretty good deep diligence questions in terms of the business. So like, let's talk about each business line. Let's talk about how defensible the revenue is. Let's going to talk about, where you see the growth actually coming from, how you're scaling up the team, what does capital allocation look like, and so on. So, in those later stage conversations, it looks a lot more like traditional due diligence for an investment. In general, I think like as a whole category, the obstacle is usually not the person that I'm talking to, but the rest of the investment committee or the rest of the folks that are around the table, where they have to go and sell them on the vision of where DeFi is going that allows them to go out further on the risk curve. At this point, it's de-risked to offer trading of the Bitcoin, Solana, Ethereum. A little bit different offer trading of, every single Solana coin ever created, which is what you get with Jupiter. A little bit different to go, on chain for yields and so on. And so we're trying to kind of build up that conviction and show people that, hey, we can do this in a way that looks similar to what you've seen before. That's why we do token holder reports. It's why we do all sorts of public comms to kind of put people at ease that this is not all fly by night as an industry.
Yeah, I think the comms that you guys put out are definitely industry leading. They're right up there. They're like top of the tier, even from a TradFi perspective.
Appreciate
I
that.
think if out of all those questions you get from investors, and what's the biggest misunderstanding about Jupiter? What's the question you wish people already had the answer to?
Oh man, I mean, there's a few. Are you a DEX is something that we get a lot.
Okay.
We started as a DEX aggregator. Now we have these like 12 different products and everything. So just people kind of fundamentally misunderstanding the business is a tricky one. One of the things that really hurts is people, I'll tell them about the Jupe accumulation that we have, these kind of ongoing programmatic buybacks. And they're like, oh, wow, I had no idea. That one really hurts, because it's like we clearly are not telling that story effectively enough that people are understanding it. And I think recently we've had a real shift in our token communications to treat it like a product and say that. And so now I don't get that question as much as I did like 2 months ago, but that one was very painful 2 months ago. And then probably the one I get that's a little bit on the lighter side is like, is Meow his real name? And like, what is his real name? And that one I'm not allowed to say. I'm contractually, I can't give the answer. So please stop asking.
Yeah, what is Jupnet and why is it the right time to finally explore a product like that for Jupiter?
Yeah, so Jupnet is a massive expansionary move on Jupiter's part. So up until today, Jupiter's only been on Solana, and that's been great. We've been able to grow with Solana, fastest growing ecosystem, all that other good stuff. And we will always have products on Solana, and we'll always love Solana first and foremost. But Jupnet is kind of an attempt to solve an even bigger problem. When you think about what Jupiter solved in the early days on Solana was by aggregating all sources of liquidity, we enabled users to have a smoother time, and then the best tech was able to win, right? Because you didn't have to go out and also worry about distribution. It's how the prop AMMs work right now. People just use them through Jupiter. We now want to solve what we think is kind of the biggest problem across crypto, which is interchain fragmentation, not just liquidity fragmentation. And Jupnet is an attempt to kind of bring all users, all assets, and all liquidity into a singular decentralized venue that has the same kinds of trust guarantees that you would get from other decentralized ecosystems. So the simplest way to think about it is, decentralized Coinbase, decentralized Binance, that kind of thing, by actually connecting all the different chains together. Now is the right time for it because it is clearer than ever that we are heading towards a world with, we like to say 1 million chains and 1 billion people. Like there's a lot of chains that are still being developed. The wars are far from over. And there's ever more incentive for people to launch them, especially with the rise of kind of corporate chains, as they're called on Twitter. Your Tempo from Stripe and Paradigm, for example, here. Many more are going to continue to come, is our belief. And so you need some venue that can connect all of these things together and kind of unify some of that liquidity and that user interest in this kind of decentralized fashion. Now feels like the time that as there's a lot more adoption coming in, is the time for us to be able to roll that out and start to get some success. It also felt like, on Solana, our product was stable and had a strong foundation where there's enough users that we could credibly launch a new product and transition a lot of those users to use both. And so it felt like kind of appropriate from a business decision perspective. And then finally, it is a long-term bet, right? We're not expecting it to be like day one, doing more volume than Hyperliquid, for example. I mean, that'd be nice, and who knows, never say never. But Really, this is kind of like a new 5-year journey for the state for a part of the company. We have about 20-ish people who just work on Jupnet specifically, almost like an R&D arm. And they have a lot of very interesting ideas on how to improve virtual machines at a fundamental level. So the Jup VM, which is what kind of anchors it, it's an evolution of the Solana virtual machine. There's been a lot of great innovation that's happened there, and they have clear ideas on what else can be improved to ensure that the trading experience is second to none. So all of those reasons kind of came together, and now Jupnet should be going live in the near future.
Yeah, as I mentioned, your comms and content, I think, is some of the best in crypto. If our listeners want to learn more about Jupiter, where's the best place for them to go to get results, to find those resources?
If they're okay to kind of wade into the cesspool that is Twitter, Twitter is definitely the best. We're the most active on there. So at Jupiter Exchange, or you can follow me at Kash Dhanda. I end up talking a lot about Jupiter stuff as well. That's a really simple place. I also encourage people just to sign up for our email list, which you can find on our website. And then finally, we do have an investors group. It is kind of meant to be invite only. If you DM me after you see this, we'll happily add you to that group, and then you're able to kind of get a more steady stream of investment or investor specific updates. That'll include some product stuff, but also some business stuff, upcoming events, things like that.
Kash, I think one of the products that's kind of come out of nowhere real fast, particularly around the US election, is the growth and the adoption from not just crypto users, from the real world users of prediction markets. How do you see that market developing? And you mentioned you've recently just launched a product as well. How do you guys want to play in that space?
We think it's a pretty major market in the making. It's already a large market. We think it has a lot of scope to grow much further. The UX for prediction markets versus traditional trading is just much preferable for most kind of like quote unquote normie or normal type of users, right? So like when I go to my brother who works at Google, by the way, he's like a very tech savvy kind of guy. He looks at some DeFi products and he's like, it's a little bit too much. But if you look at prediction markets, it feels much more approachable and kind of fun and easier for people to get involved with. And it offers fundamentally a new type of asset, right? This kind of information-based asset. So we're really proud to have partnered with Kalshi, who I think is actually leading right now in terms of overall volume for prediction markets. We're their first on-chain partner on Solana, and we're launching a prediction market together. We see markets kind of evolving in 3 directions. Of course, the first one is, the kind of standard stuff, right? Your sports betting is a clear example of this, right? So what's going to happen at the F1 race was our first test market, for example. And we'll see many more, basically all sports coverage, I think, will come on chain at some level because it's just easier to do and there's a bunch of other benefits to it. The second would be, I think, kind of like politics and real world events. Again, this one is fairly well trodden. This was obviously the original market for prediction markets. And we are really excited to see that expand out to the longer tails, right? So seeing more sophisticated investors also using prediction markets for something that looks a little bit like hedging or expressing views on macro or whatever else it might be. But the third area that I'm personally incredibly excited about is binary options. I don't think binary options have really done well in crypto historically, partially because of the UX factor, partially because it just wasn't the right time, there wasn't enough liquidity, et cetera. But now in particular, I do think for a lot of folks, trading binary options is, whether you're kind of more retail, a little bit less engaged, or very sophisticated, is really exciting. So weekly expiries for, is Sol going to be above $200 this week? Is Bitcoin going to reach 120,000? And as the markets get deeper, you can actually kind of have many different options with many different prices. And I think that's actually going to end up being the main way that a lot of those options contracts come on chain. People have been talking about the size of the options markets. It's many trillions relative to, it's a big multiple on, traditional spot markets, for example. And we've seen a lot of innovation in perps and we've seen a lot of volume in perps. But I do think that binary options have very broad-based appeal. They're kind of comfortable to traditional investors as well. And I think prediction markets are the perfect form factor for that. So that's another thing that we're.
Yeah, I think that formula of here's a percentage, yes or no, over a pretty simple question seems to work really well. And I mean, we're starting to see, it's interesting, right? If you look back at, maybe a lot of people don't know this, but you look back in the early 1900s, political betting was some of the, the most liquid markets on the New York Stock Exchange, right? It used to be a huge part of trading in the US before I think it actually got banned back in the early 1900s. So we're kind of seeing a renaissance. I guess sports betting has been around a long time, but I guess the niche markets you can develop, like, will Trump say, thank you for your attention to this matter in his next tweet or something like that, right? Which is, when you think about it, the addressable market for these sorts of things and the gamification of these sorts of things is just kind of, uncapped.
That's right. That's right. I think that people have a lot of opinions. Famously, opinions are like assholes. Everyone's got one. And people like to express that view in the markets, right? And so
even better, put some money behind that opinion.
That's right. Especially in a world where you're kind of inundated with information. And I personally have weird opinions on the Met Gala. I don't even know why I have these opinions. but I have them, and it's something me and my wife will like kind of joke about and talk about. You know, to be able to like express financial views on it, I think only kind of enriches that experience further. It makes it a little bit more fun. And if you are actually a sharp, it gives you a real way to kind of consistently profit. And we're seeing, you know, a new generation of traders who are kind of skipping over crypto spot and perps, and they're going straight to prediction markets and doing extremely well, kind of exploiting information asymmetries. And so as those markets kind of get denser and more liquid, I think that some of that opportunity goes away, but it'll expand to longer and longer tail markets where there's less clarity on, you know, what the right outcome is actually going to be.
Yeah, I think for someone like us, as they become more liquid, you start to get kind of access to all sorts of new sort of hedging mechanisms, right? You can come up with much more refined hedges through those markets than you can create through current options markets. So I think it's a super interesting way. It's probably got a little way to go now to get the liquidity for those sorts of things, but you can see it's moving pretty fast.
I think we'll do our part to bring on some extra liquidity for you as well.
Okay, Kash, that's great that you could join us today. We think Jupiter is just one of the best projects out there in crypto. It's one of the biggest parts of our portfolios. We're a big supporter of what you and the team are doing. We think the products that you're bringing to market, the speed that you bring them to market, the usability of those products in terms of allowing us like an institution to get liquidity, but new users to come on to Solana and crypto for the first time and have a much more sort of Web 2 point and click type experience. I think you guys are way ahead of the pack on that. So look forward to continuing to follow your journey, and just thanks for telling everyone on the podcast today more about Jupiter and where they can find more information. So thanks for joining us.
Appreciate it, Richard. Thanks for having me on anytime.
Thanks everyone for listening to DACM Insights. If you found this interesting, please sign up to receive our weekly newsletter, and there'll be more of these coming as we look to introduce more projects that we find interesting across the crypto space to all of you.